Hey, what's up everyone? Welcome into the channel. My name is Brent with Investing on the Go. In this video, we're going to go ahead and cover all the buys that we performed in the month of June and how those additional shares affected our monthly income and our yearly income going forward. And then from that point on, we're going to be jumping and take a look at all the dividends that rolled into our account in the month of June and talk a little bit about our plan going forward into the month of July, right? So with that said, if you guys are brand new here, definitely would appreciate if you go down below, smash that subscribe, smash that thumbs up, drop me a comment down below. Do you guys have any plans for July that you've written up for yourself? Let me know down in the comment section below, and check out the pinned comment, get some goodies, join the Discord server, and let's go ahead and get into the video. Now, if you're brand new here to the channel, right now I'm running a dual account system using Robinhood. I have no 8 to 5. I generate income via my dividend portfolio. I have my real estate business and I have my miscellaneous social media business here. So these systems all work together. And I got this updated last week and I went over it with my last video, but if you guys are watching this today and haven't seen it, well, this is perfect time. So on Robinhood, I have my margin account. That's where all of my investments are, being held within. Inside of that brokerage account, I also use between $125,000 and $135,000 of margin, which I consider safety because I could transfer some capital from my Fidelity account now to pay this off. And we'll talk about my Fidelity account here in just a minute, which is part of my plans going into July. Now, have this brokerage account. It produces dividends and miscellaneous income on a monthly basis. Those dividends roll into the brokerage account and pay down that margin. And then as the month is going on, I have all my daily expenses, all the bills being applied to my 3% Robinhood cashback card. That's all my spending. Now, at the end of the month, right towards, we'll say the 28th of July, at that exact time, I'll take a look at, okay, I have my mortgage coming up. I have my car loan payment, which is due here in the next 2 days on the 8th for me on July 8th. And then I have my credit card payment, which is expected right around the 4th or 5th to be paid off in whole. So I send the exact amount of capital required from my margin account to cover the mortgage payment, the car loan payment, and the credit card. And all of those have now came under how much dividends this account is generating. So I'll have excess amount to control the margin, excess amounts to reinvest. And I do have other cash that I'm injecting into this account at the same time. I have my real estate business. I did sell one of my rental units. I still have two of my rental units, and that's producing roughly $2,000 in revenue. I cut about 1,550 off, but that revenue isn't exact, right? There's a lot of property management, maintenance, expenses, mortgages attached to it, and it's not pure 1,500 of income. So we'll chat more about that in another video if you guys would like. But that's kind of the system as it is. I inject the specific amount of capital into my cash account, pay these down to zero, and then leave the remaining in the margin account to pay down the margin, reinvest for continued growth going forward. That's how this system works. Now, let's go ahead and jump into our dividend portfolio as it is right now at the very end of June, July timeframe, beginning portion of July, end of June. Now, I've updated this. It looks a lot cleaner. Let's take a look at the screening here. Yeah, it looks a lot cleaner. So our portfolio consists of the Top Alpha S&P 500 Growth and Daily Income, the Top Alpha Innovation 100 Daily Income. Those are my primary, bread and butter. I do have the NEOS Russell 2000 High Income ETF. That's been doing really well as well within the portfolio, generating a good yield and distribution. On the side, I have the satellites here. I have the NEOS Gold High Income ETF and the NEOS Bitcoin High Income ETF. These are not large positions. I invest at a little, over $15,000 into these positions, and they've done the worst out there, right? I'm really comfortable holding on to things that track an index like the S&P 500, the NASDAQ, because time tells that, over time, by dollar cost averaging, being consistent, the S&P 500, the NASDAQ has had great returns. And despite it falling occasionally, that is the best time to dollar cost average. On the flip side, The gold and Bitcoin, those are not always in the same bucket where, hey, if it falls, within the next 1 year to 2 years, it will recover naturally. And by dollar cost averaging into it, you'll be better off. That's not the case with these. So I just have a specific amount that I've invested into them. You can see they are down a good amount. Now, XQQQI, these are the leverage boosted NEOS 100. NASDAQ 100 and the XSPY, which is the newest boosted S&P 500. These are just testing pieces right here. If these fall down a bit more, like if the market does happen to fall back, further, I wouldn't mind injecting more capital into these. But as it is at the moment, I'm just kind of keeping them on the sidelines. Now, jumping to what we purchased in the month of June. That's kind of the highlight here. If we go back right here to the beginning of June, we picked up TDAC, T-SPY, additional TDAC, more T-SPY, some IWMI, T-SPY, TDAC, and TDAC in the month of June. And with these purchases, let's go ahead and click right here. We increase our monthly income just within the month of June from when we started buying at the beginning of June till the end of June. Because we did do a large, June was my margin month. That's when I injected $135,000 of margin. So it increased my monthly income based on the shares that I purchased by $1,693.77 going forward. That's a good substantial amount. Now, that increased our yearly income as well. Going forward, multiply that amount by 12. That's going to be increasing our yearly income going forward by $20,325.26. If everything stays consistent, the market continues to average about those 7-10%, and everything works as intended, this will just continue to work smoothly and pay out those distributions. I'll use a portion of those distributions and I'll be reinvesting the remaining amount back into the portfolio to dollar cost average, increasing my yield on cost, increasing my shares, and my overall future income. That's how it is right there. In the month of June, we also increased our share count here. It's hard to tell, right? Initially, I put TDAC and T-SPY into separate buckets because these were initially margin buys. So using margin, I picked up 2,147 shares of TDAC, 2,381 shares of T-SPY, and then I went back and was using cash. I funded cash into this account and funded into TDAC, T-SPY, IWMI, T-SPY again. And these little portions right through here, I took capital that I had from my other accounts, or I had some capital that I made from Facebook, YouTube, and affiliates, and injected capital to cover the cost of those purchases. But overall, I think it was a pretty productive month. We ended up probably buying around 507 shares between TDAC, T-SPY, IWMI. And then with that margin, we ended up picking about 4,528 shares between the T-SPY, TDAC, and they're both priced about the same. So that's a pretty good buy. So I updated the dashboard up in here as well. So we can clearly look at this dashboard and see, okay, I've received so far in the year 2026, or within this portfolio, in the year 2026, I've received $28,817.93 of dividends. My estimated monthly payout going forward right now is $6,194.23, and my estimated yearly payout at the moment is $74,330.71. That's averaged out. Usually for these estimated dividend amounts, I take the last 6 months of distributions, divide it by the amount of months that I went by, and that's what I kind of end up as my average estimated amount. So that's what I use for these metrics. So that is all the positions that I bought in the month of June, how much they appreciated, or increased our monthly income, increased our yearly income, and our current holding as a whole within the dividend portfolio. Now, jumping into our dividend journal, I updated this as well. I think I already had this updated the last time we kind of chatted about this, but the dividend journal massive amounts of dividends in the month of June. We started off early on with T-SPY. We had $1,934.05 from T-SPY, followed up by my smaller positions from XBuy and XQQQI. So $3.57 from XBuy, $4.61 from XQQQI. Then we again got hit by those big boys later on, a little, about after mid-month. From TDAC, that $2,494.62, followed up behind by Bitcoin BTCI, $195.75, IWMI, that $1,316.29, and then to to round it all off for the month of June, we had IAUI, the gold ETF, $143.61. Now we roll that all up together and we end up with a grand total in the month of June of $6,092.50. So we'll just say 6,000, right? I paid my mortgage down. That's, I'm going to say, about $1,800. I paid my credit card bill. That was about $2,000. So right there, we're about $3,800. I paid the car in the month of June. That's about $550. So all in all, we exited probably about $4,500 in outgoing, outflow of capital. And this portfolio generated roughly $6,000. I did have my real estate income. That was $2,000. But last month I made, I only had 2 properties running and producing income, and I was selling that third property. So in overall, when I subtracted all of the expenses for last month in the business, it only ended up about $13 net positive last month, because my other properties had to kind of fund some repairs to get my my selling property kind of back, on the market and all that. So going forward in the month of July, I should cash flow much better going forward in July with my rental business. I've got paid more out in Facebook in the month of June than I did back in May. My YouTube income also kind of rolled in, but I don't believe it's as much as my Facebook income. So we'll talk more about that here in a bit once I do get those finalized. But overall, really happy with this portfolio and how much we've produced in the month of June, and we'll probably continue to produce going forward, right? As you can see right here, T-SPY last month was $19.34 versus this month we're at $2,046.78. So that right there is already a nearly $110 difference between last month's payout of T-SPY versus this month's payout of T-SPY. So that's our dividend portfolio, how much income we increased on a monthly basis, yearly basis, and how many dividends we received in the month of June. Now, I also like to talk about the stock journal. That's the last thing here that we'll kind of chat about. Then we'll jump into our plans for July going forward. So this is the updated stock journal. I took this whole weekend, minus going out with the family and to enjoy the 4th of July and injure my foot a bit more than it already was injured. But I went through here and I fixed everything up here to make it a lot more appealing to the eyes. So our total shares, I just did a very rough amount. Anytime that I sell and recapture shares, I've done that positive where I was able to recapture roughly 70 shares throughout that process. My overall net gain and loss so far between all my accounts, my taxable, my IRA, Roth IRA for 2026, is about $9,465. I have had some losses. If we go ahead and just flip to the taxable account here, we can see on the taxable side, I've only net profited about $1,770.05. I had a loss early on in January. We can see here we took 2 losses between TDAC and T-SPY of negative $2,435.96, and then T-SPY that $1,873.42. And that was my one loss out of the entire time I did my swing trades. Oh no, I have another one right here, QQQI. But I transitioned from QQQI and rolled that into TDAC. So it really wasn't a terrible loss there. That was, I forgot what I was doing at the end of March. That's when the market began to recover, and I dropped out of QQQI and rolled back into TDAC, and that helped me out positively because the appreciation versus, when we sold QQQI back on 31 March, it's only moved up 13.62% since we sold out of that. Versus when we moved into TDAC, those 3,664 shares within our TDAC, portfolio right now, has increased by 16.55. So we just had a higher rate of return with those TDAC positions. And yeah, we can see all through here, everything's done pretty well. So yeah, we started off pretty bad early in January. And as we proceeded, every time that we kind of rolled, sold, and then re-rolled, we can see the numbers here of what I do. The net cash variance is the difference between where I sold and where I rebought. So if we just look at one example, let me go ahead and let me bring up TDAC as an example in here of what we've done. Is that anytime I sell out of TDAC, here's my re-entry. So I take the re-entry capital and I take the sell portion and I subtract my re-entry. So when I re-entered, I spent $3.08 less re-entering into my TDAC position, but I accumulated 13 additional shares. That equity difference by multiplying the 13 shares times the equity execution of 2632 was a difference there of $345.24. So then I just combine the net gain of those shares plus the net cash variance, and that ends up, I added the equity change right here with the net cash variance, and that ends up with my total cash gain or loss. So I break it all down here in the notes here. My rebuy campaign, where I was able to keep $3.08 of cash, gain 13 shares valued at $342.16 for a net total swing of $345.24. That's kind of the process here I went through, and that kind of gave me a better outlook of, have I been able to do this positively where I sold and re-netted the shares. Obviously back here in January, again, I lost 99 shares during this time frame right here. But if I look at the whole thing, I've actually reaccumulated that net loss of 99 shares. And here I accumulated 52 shares. I picked up 43 shares right here by selling and rebuying, right? So here I sold that 6,265 shares. I was able to pick up 43 additional shares by spending $10.94 less. Those 43 shares times that share price was roughly $1,176 for a total net gain of $1,187. So that's kind of how it works right there. But overall, for TDAC, right, we're up $1,733.88 by doing those little swings, and I've accumulated 40 additional shares with TDAC. Same thing kind of goes with these other ones. I can kind of go in through here and mark, not SPY, but T-SPY, for example, and do the exact same thing. The overall net gain for T-SPY, not as much as TDAC, $491.78. That big loss that we took early on in January has been kind of the thorn in the portfolio, but everything else after that has been all net positive. We initially lost those 78 shares in January, but we've reaccumulated 14 shares since that point moving forward, right? So that's kind of the updated stock journal. So going forward, anytime that I'm making purchases, I kind of got the plan now going of how I want to keep track of all my buys going forward. So, as I'm doing additional buys, I'll just go in through here and add another entry. So for example, go ahead and re-add all these. Lately, I completely sold out of my Meta position. So here, if you guys are interested in my retirement account, I completely sold out of Meta. I had 68 shares in my Roth IRA, 81 shares in my IRA. In combination, I was holding around $92,000 of Meta, and I took a net gain of $634.80 in one, and a net loss of $548 in the other. overall, I'm pretty happy to be out of those positions. I rolled the capital into ticker symbol SPMO. I already had a substantial amount in SPMO. So if we jump over now to Robinhood and we go to our retirement accounts, we can see here that these are only holding SPMO now. Our Roth IRA is around $87,000. The traditional IRA is sitting at $85,000. So this has 571 shares of SPMO. The other account here is holding 557 shares of SPMO. So got a little over 1,100 shares, I believe, of SPMO. And these are set up as they are with drip enabled. I'm not going to be touching my retirement accounts. I'm just going to let them focus on continued, growth and enable drip to, dividend reinvest within itself and just be really hands off. I will just mostly be not playing around, but investing through my taxable account, which is our margin account here over at Robinhood, where we already kind of covered all the ticker symbols and such that we're invested in at the moment. And that's the plan right now. We're almost at all-time highs once again. I think the all-time high in the portfolio is right around 360,000. So we're just a smidge away. I think we're 1 or 2% away from all-time highs. So I don't know if we'll hit that this week or if it'll be next week. So the last area here that I want to do is the plans going forward in the month of July. So we had capital distributed to us from selling the rental unit. That was around $106,000. I took some other capital that I had sitting in my other savings account and I rolled it over to Fidelity. The high yield savings account that I was using at SoFi dropped my high yield savings account rating from, I believe, like a 3.3 to a 3.10%. And I was like, you know what? I can get more from the SPACs by holding it over at Fidelity. So I transferred, I still kept a good amount over at SoFi, but I transferred the majority of what I made for my real estate investment sale. I transferred some excessive, some additional capital, and then I had some escrow from the taxes and insurance that was paid out to me. So I rolled that over here as well. I think this is all of it as of now, but you can see that I only have $25,000 available for trading. So what's going to happen? What's my plan going forward? Well, I'm going to take this $25,000 that is available to me, and I think within either this week, if I see the market stabilizing and doing, what it's doing, I will move into my investments of T-SPY, TDAC, and, dollar cost average in one chunk, and just do one chunk into both. It's kind of split 25,000 down the middle, buy into those. If the market does happen to pull back, which, it could happen, then I will begin deploying more capital as it begins to unlock. Usually when you transfer large sums over to Fidelity, they lock it out for anywhere from 10 to 20 days. So at least this way I have some of the capital invested in the market. And right, we're only 1% away from all-time highs. So what are the chances that we'll actually fully recover to that all-time high and begin breaking above it? I feel like the chances of that are under 50% versus some sort of retest. We have earnings coming up. So that's kind of what's in the decision-making process right now. If I leave it in cash right now, I'm getting a 7-day yield of 3.3%. On the capital, if I were to take 108,704, just leave it as it is in SPACs, it would get on a yearly basis $3,261.15. We divide that by 12, that's a monthly difference of $271.76. And that $271.76 is completely passive. Now, looking at it from my real estate side, this capital was tied up in my real estate property. My real estate property, while it was producing around $1,500 of revenue per month, we still had a $620 mortgage. I was paying $120, $140 for property management. I was covering recycling and trash. I was covering water. I had some miscellaneous repairs that was kind of popping up here last minute. And early on, January through March, I was net positive around $600 per month. But these last, let's see, through March, April through June, well, June, the tenant moved out. That's why we decided to sell. But the last few months with the tenant in place, we were actually averaging basically flat on the month with this unit and kind of being under that monthly $271. So by leaving capital in here and not having it directly affected by the market here in the short term, with that volatility, I could wait for a bit of a pullback while still generating roughly the same amount of net income I was making from the unit without any, crazy fluctuations. So that's kind of the plan there going forward. I do plan to invest at least 25,000 from that into the market to see, usually when you invest large sums into the market's like, oh, you invested with me today? Let me go ahead and fall 2, 3, 5%. You know what? Because you invested today into the market. So that is going to be it for today's video, guys. I do appreciate everyone tuning in and hanging out. If you guys have any other comments or questions for me, let me know down in the comment section below, or check out the pinned comment to join the Discord server. It's completely free. And again, please go down below, smash that subscribe if you guys are interested in continuing following along on the journey. And of course, smash that thumbs up. It does help out the channel, help out the video. So that's it from me. Thank you all for tuning in. I will catch you guys in the next one. Bye-bye.